The global financial system is owned and controlled by the Federal Reserve. You came here for the truth, so let me unveil that for you. Today we will discuss what the Federal Reserve plans on doing, what they say they're going to do, and all of the contradictions that have been going on. So I'll show you the information, and then as you see it over the coming days and weeks and months, you can decide for yourself exactly what's going on. Let's look at the first article here. Notice the contradictions as I show you them. The Federal Reserve has abandoned hope of raising interest rates in the next meeting in June, but the Fed officials say that they are still thinking seriously about raising rates in July or September. So here they are immediately already giving up on June. Now this is the article out of the New York Times, so hang in there for a moment. Immediately they say, look, forget about June, not going to happen, but let's look at July, let's look at September. They promised that they would raise rates a few times this year, and there is no indication of that occurring anytime soon. Janet Yellen, the Fed's chairwoman, who said a few weeks ago she expected to raise the interest rates in the coming months, omitted those words on Monday's speech, indicating that the report of weakness in jobs growth may have caused the Fed to rethink its plans. How many times have I come up here and talked about the Fed having this job growth, and they look at the jobs numbers and they see that and they try and make this decision for whether to increase or decrease the interest rates. This has never been a good factor, never been an accurate display of the actual economy, but here they are looking at a very poor, even fake report, and they are unable to decide whether they should increase those interest rates. Yellen delivered a generally upbeat assessment of the economic conditions, basically saying that, look, we have this one piece of data and it's not so good, but look at all the other ones. They're great. And that's where we see the real failure in the whole system, because as long as they can submit their propaganda, no facts, just the propaganda, the public will unfortunately be fooled. Let's look at this, another article here out of the New York Times. The Federal Reserve sent a sharp, simple message to financial markets on Wednesday. Pay attention. The Fed is thinking seriously about raising its interest rates in the next meeting in June. So we have definite contradictory information that is occurring. They're not able to decide one way or another. One week it's one thing, the next week is another. Does it have anything to do with that jobs report? Is it so significant one month to another? Of course not. But that's what they use as a tool. They use their words as a tool to manipulate the stock market up and down, and they test the markets using their words. They don't even need to take any actions any longer to actually move the markets. We've discussed that before, and it is in fact considered to be an actual tool. It's pretty amazing. The unusually frank bulletin was delivered in the official account on the Fed's April meeting, which said explicitly it likely would be appropriate to raise rates in June if the economy shows clear signs of a rebound from a weak winter. Is that what they're going with? That the weather is actually significantly affecting everything in the economy? I mean, this is a joke, people. But of course, there will be people that will go ahead and whatever the Federal Reserve says, they believe it. Not that they really like the Fed or the monetary system in general. They should just say, look, the Fed's in control. I'm going to do whatever, wherever they are going, that's the best way to win. If you can't beat them, join them type of idea, which I simply cannot agree with. There's more information in the article if you'd like to check it out. But the last one I'd like to get into out of the USA Today, Yellen pointed out that the economy added 230,000 jobs a month last year, supposedly. And the unemployment rate has fallen from 5% to 10% in 2009. And she's saying that, look, we're having some issues, but overall, the economic factors show positive trends. If the incoming data are consistent with the labor market conditions, strengthening and inflation making progress towards our 2% objectives, I expect further gradual increases in the Fed funds rate to be likely appropriate in the coming months. There is no economic factor I'm aware of that shows positivity. If anyone knows of any, please mention them now. And of course, I'm being serious about that. There haven't been any realistically. I mean, you look at all of the shipping factors, you look at the actual amount of people employed, just look at who are being employed. I mean, we're looking at temporary workers consistently being hired. You have them taking on 2 and 3 jobs, completely skewing the markets. And this is the unfortunate economy that we're in. You look at all these other factors. They're all showing you a decline in the markets, but this is just the way it goes. What I would be paying attention to is the Fed's words over the coming weeks as they go into the next month, because what's going to happen, just like in the previous time where they raised the interest rates just a minuscule amount, what we found is that they actually had no reason to do so because the jobs numbers were coming back, all these economic factors coming back as negative, but they had to just to save face. If they continue to do this over periods of time where they're saving face, it will eventually actually begin to hinder the economy significantly. So this is quite interesting. Keep your eyes on this as we move through the coming months, and we'll see what happens. If you found this video informative, please give me a thumbs up. Last but not least, you can check out my free e-course where I have tons of information, all free, all available to the public, because my goal is to educate as many people as possible, where people like you and I may understand what the Federal Reserve is and the interest rates are and everything else. The eCourse gives those people who may not be so aware, or maybe they have a few questions about it, they check out the eCourse, and I'm consistently building on this, and it will give people, perhaps it's your aunt or your grandmother or who knows who are just getting into this information. They wanted to know, they don't want to know all the deep intelligence about this, but just the basics. That's what the eCourse is for. So if you're interested in that or wanted to send it to someone else, check that out at themoneygps.com.